Hey, what's going on, everybody? My name is Kevin. I'm a loan officer with Movement Mortgage, and today I wanted to do a simple video to talk about the real estate market and to talk about the forces of economics at work here, and just basically break this down for you guys. So we're seeing a lot of folks who are saying, "I want to wait. I want the market to crash." Blah 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 blah. The reason why you think the market's going to crash is because the last recession was basically caused by housing, therefore housing prices crashed. This is not the same scenario. This recession that could be coming, that is maybe not here yet, you're not going to see home prices tank like you did after '08. The If you look historically at the United States and how many booms and busts we've had, real estate has been strong in every single recession. So only the last recession is the anomaly, and that's because it was housing itself that caused that recession. So here's what you're wrong about, and here's what I'm trying to explain in a very easy, simple to understand way. There is demand out there for homes, but there's not enough supply. So what does that mean? You'll see on the y-axis we have the price. On the x-axis we have the quantity, meaning this is the number of homes available on the market, and this is the price for those homes at that quantity level, okay? We have the demand curve and we have the supply curve. Supply is set by other factors like builders, that whole production kind of calculation. Nothing that you really need to know how to derive that supply curve. I'm just going to show you what happens when that supply curve shifts. Demand makes sense as basically as the price falls, demand increases for homes. And that kind of makes sense, right? As prices increase, demand falls. So we're looking at the supply side here. This is really not an analysis on demand. People need homes, and there's this constant sort of pressure to keep the demand curve really right where it's at. Interest rates may move this demand curve just a little bit. It's actually not going to move it as much as you think. Supply is the biggest issue that we're seeing right now, okay? So what happens is, when you look at a supply and demand curve, where they cross, we call that point the equilibrium point. So if you were to just take a little tick mark and bring it down, there's a quantity, call it X, that's the amount of homes that we see on the market today. And then when you do your little tick marks over here to the price, this is the price of homes at that quantity level, right? So 500,000 homes, the average price of a home, however you want to skin it. But basically what's happening, and what nobody's understanding, is that demand is still there, except supply is shifting to the left. So when supply moves over to the left, this could be supply chain issues. This could be builders not being able to build. This could be government regulation cracking down on builders, and so they're not making building permits easier. Whatever it is, the supply of homes, meaning the actual physical building of homes, has dramatically been reduced. What happens is the supply curve then shifts over here. Okay, now we have, this is our first supply line, this is our second supply line, and then when you draw your tick marks from this new equilibrium point, this is the market kind of correcting to the new supply level. As you drop it down, you'll see quantity here is now lower than it was on the number line. We started at a higher quantity, now we're at a lower quantity. You'll also see when you run your equilibrium out that now price is higher. Prices have increased. And so this is why you are seeing prices of homes rising, because demand is still there, except we're having a supply issue right now. So when that supply curve keeps pressure to the left, prices increase, quantity falls, and so trouble gets more trouble. Less quantity, higher prices, it just goes on and on and on. What we really need to see happen, and this is not a stock market crash, whatever you guys are talking about, it is builders building homes. The United States is not building homes at a pace at which people want homes. So what we would need to see is a crap ton of builders come in and just start bulldozing some stuff and building homes. And what we would need is supply to come this way. This could be the new supply, call it S3. And what you'd have is an equilibrium at which there is a higher quantity of homes at a more lower affordable price. Got it? Hope you were taking notes. Guys, there's more to life than just trying to figure things out on your own. You need to be dealing with experts in anything that you do. Don't take mortgage advice from a financial advisor. Don't take financial advice from a real estate agent. Don't take medical advice from a landscaper. And so when we're talking about the real estate market, a lot of you are doing the wrong things. You're watching YouTube from some 22-year-old who gets paid for you to click his ads that doesn't know anything about the market you're in your state, in your country. And so what they're doing is they're using like some cool data to show that this could very well possibly be the case if this happens, whatever. What I'm basically telling you is what's happening. We have a supply issue, not enough homes on the market. That's, of course, driving prices up. And until we see supply increase, until we see builders come in and just start building homes, you are going to continue to see prices be sticky or continue to increase. Sticky is an economic term for they don't really fluctuate that much, okay? That's all I got for now. I'll see you guys in the next one.